Lots of movers today. We've had earnings from Google, Tesla. We've had earnings from American Airlines, Love, and then plus we've also got continued meme craze pushing with AEO, American Eagle Outfitters, pushing higher this morning on the back of a new campaign with Sydney Sweeney. Let's jump into the charts, get these levels so we can be ready for the trading day today. All right, first up, SPX. We've been talking about this for a while. This extended move likely needs some sort of pullback. Well, I've been really waiting. The last big line in the sand for me is right here at this inclining parallel channel, basically at 6,400. We're creeping up there today. We'll see if we can actually tag this resistance area today. As I've said, look at the RSI overbought. We need some sort of correction. A 5% pullback would put us just slightly above 6,000 right here on this pivot point. That's a likely occurrence with this sort of extended move. Next up, we've got the QQQ. Not much to report here, just still trapped here within these two parallel channels or two trend lines. We'll see if price action can bust out or bust down today, but the Qs are definitely staying resilient. SMH is showing more of a curling over pattern. If you notice here too, we've been here since the beginning of the month. We haven't really gone up or down much and really getting rejected right here by this inclining parallel channel too. We could still chop around this area, which would then potentially lead to further downside. Right here is where I have decent support at 265.51, followed by 258.03. Next up, IWM. This index has actually been showing a lot of strength recently as we did push up yesterday, closing above this pivot high this morning. We're starting to come back in ever so slightly here on the IWM. Ultimately, this has been bullish consolidation right here on the chart. We'll see if we can't get back up, at least close where we closed yesterday today. If we do, that would be a big, strong signal for the small cap stocks here in the IWM. Bitcoin, as we've talked about over the last couple of weeks, we have been forming consolidation here after putting in a nice topping tail on the chart. There's a weekly topping tail and a daily topping tail. That's bearish in the near to midterm. You can notice here too, this topping tail with its creation and moving up near term has actually created a bear flag on the charts. If you were to X out that topping tail, this would be a bull flag on the charts. Regardless, this sentiment for right now in Bitcoin, even though it's not sold off, should pull back at least to this 113,278. XRP and some other alts have really started faltering or at least pulling back. XRP last night got down under $3. Gold, as you see here, is also starting to pull back, ultimately getting rejected from this declining trend line right here. So we're back in this wedge trading. No new update for any breakout. Support on the downsides down here at 32.86. Next up, silver also pulling back this morning as we see. Kind of makes sense. We had a doji candle right here. We're in an extended situation on the charts, and we've had a great move accomplishing the measured move from this inverse head and shoulders pattern right up here on the charts. I've got support down here at 36.58, followed by 34.86. But if you notice, we're in a parallel channel here, highlighted by this yellow inclining trend line and this yellow inclining trend line down here at the bottom of the chart. These two areas are the first areas of support, but if silver starts selling off harder, this trend line will capture price and hold it up right now, roughly around 33.63. Next up, U.S. oil pushing up a little bit today. Doesn't change much with this longer term pattern, all still inside bar bearish consolidation. My target for this sort of move on U.S. oil is down here near the $60 mark on the chart. Next up, nat gas also getting a slight bounce today after 3 continuous selling days. Beautiful selling here on nat gas. We'll see if we can get back into this wedge. If not, we're going to be coming down lower at the $3 mark, followed by 255 on nat gas. Now let's get into some movers. So we had Chipotle Mexican Grill. You can see here down trading now at $45.80. They reported earnings yesterday after hours, missed on revenue, but beat on earnings per share. And they did mention too that the consumer sentiment was weakening in their last quarter. So stock price and investors are hitting the sell button. Current support for this intraday is going to be at 44.46 cents, but the longer term support's not that much further away down here at this bottom end of the parallel channel at $41.65. Watch for trading opportunities today right here at 44.46, but then maybe potentially for a swing down here lower, closer to the $40 area. Next up, IBM. IBM here also earnings yesterday after the bell. You see here, double beat earnings per share as well as revenue, yet the stock is still selling off. Guys, this has been the theme, and I've been talking about this in Trading the Close. This earnings season is different than ones in the past. A lot of companies are having double beats, much like IBM, but guidance is being altered for the future or even being taken away. And that's giving investors uncertainty, and they're hitting the sell button, just like we see on this chart. So we get back into IBM. Where's the support going to be? The major support for this sort of fall is going to be right here at 255.33. That's where I'm watching for the first area of support. More for a swing trade, you will have to look down here. This will be a very conservative level down here, 225.15. But intraday today, we have the potential chance to tag this area and get a nice little bounce for the very near term. Up next, Google. Google here actually had a double beat too, but they did say that they're going to be increasing their spending for new adventures that they do have planned for Google. So investors like that, reinvesting into their company. The stock is pushing up higher today. Price for resistance that I see is this 50% area of the parallel right at $200.05. Great move for Google. Google has really been a laggard when you compare it to the other high flyers like AVGO, pushing up near the tops of the charts. Netflix was all the way up there, now starting to come back. And then Microsoft too, MSFT, right there, all the way up there at the top of the charts. Google has a lot of room to run if it does start catching some wind with investors' sentiment. Next up, we've got a couple Chinese stocks. Now, PDD is now based out of Ireland, but they used to be based out of China. And really what you can see here, PDD has broken out from this declining trend line, which also, guys, check this out. It's an inverse head and shoulders pattern. Those patterns are awesome. They're really a low risk, high reward pattern because you can play these for any sort of pullbacks down to the neckline and accomplish the potential measured move of 147.44. We have a potential gain of over 24% from yesterday's close on PDD. Now, keep in mind, PDD near term is overbought, so it would make sense that we could have a little bit of a pullback down here to the neckline. Neckline right around 111.46 would be a great buying opportunity for further upward momentum and accomplishing that measured move. Now, if price closes down beneath this neckline, that measured move is canceled out, and thus you can stop out of that trade, ultimately giving you that low risk, high reward potential on this inverse head and shoulders plan.